Good afternoon, one and all. I, Priya Tukal, on behalf of Professional Development Committee of Institute of Chartered Accountants of India, welcome Honorable Past President of ICICA, Amitji Chopra Sir, respected Chairman of PDC, CA Prasanna Kumar D, respected Vice Chairman of PDC, CA Mangesh P. Kindre, respected Secretary of PDC, Naseema Girotra, and our renowned faculty, CA Dhananjay Gokhale Sir. And a warm welcome to all the members who have joined the webinar on a practical approach to bank branch audit. We welcome everyone. Now, I would like to request CA Prasanna Kumar D, Chairman, Professional Development Committee, to give the opening remarks for the webinar.
Yeah. Most respected CA Amarjit Chopra ji, Honorable Past President of ICA, a renowned speaker on the topic, and CA Dhananjay Gokhale ji is a renowned speaker on bank audit, and CA Mangesh Kindre, the Vice Chairman of the Professional Development Committee, my dearest dear participants and the delegates in today's webinar. So, good evening to all of you. I have great pleasure to welcome you all for today's webinar, series of webinars. The first of its kind is made today. That is a practical approach to the bank branch audit. Today we have got two sessions. That is IRAC norms with practical examples which will dealt with by CA Dhananjay Gokhale ji, and already whatever the queries that have been received by the Professional Development Committee that have already been shared with him, he will deal with them also. And effective audit planning will be dealt with by CA Amarjit Chopra ji. As all of you know, so the moment we get the appointment, a timelines are also given along with appointment letter. There are certain banks who give a week's time, certain banks they give not more than 10 days. Overall, the banking industry doesn't give more than 10 to 12 days. Given the timelines, given the 2 or 3 branches, of course, this year almost only 2 branches, not more than 2 branches will be allotted. So given the timelines, it's very difficult for us to plan how to conduct the audit, how to have an effective audit within timelines given. In this scenario, our Honorable Speaker, CA Amarjit Chopra ji, he will deal with this effective audit planning. Yeah, audit planning which is effectively done is, half of the audit is over there itself. That's the way it goes. And those who have heard him in the earlier webinars, particularly IRAC norms, particularly dealing with the cash credit accounts, I don't think you have got any other person who has studied so well about the cash credit account, how things can be manipulated, how the human intervention can change the scenario of the cash credit. I don't think there's a speaker in the entire world other than Amarjit Chopra ji, because I'm the beneficiary. I'm the beneficiary out of that particular webinar where I heard. So when he is there, I'm sure with the planning, he's going to tell us, and the practical and live examples he deals with. So we are going to do a great audit. The friends, as all of us are aware, this one of the most important audit functions in Indian audit system is the bank branch audit. And IRAC norms, though they are objective in nature, there are no objective criteria as there, but we have to think beyond that one. That's what, in the cash credit accounts, as I told you, Amarjit Chopra ji said, it's just simple application of the IRAC norms. The objective of 1, 2, 3, 4 will not suffice. You have to think beyond that one. That is the way we have to conduct the audit this time. And as you are all know, now the MOC, whatever the MOC that you are doing, that need to be captured in UDIN also. We are not going to disclose the bank. We are not collecting the data with respect to the branch also. Only the data is collected with respect to the divergence of notice, the income, expenditure, assets and liabilities, everything put together. This we would like to collate the data for the purpose of representation before the regulators and also for our self-assessment purposes also. This is the way we have been it has been planned. So with this, I request you to get the benefit out of the deliberations today. The tone is going to be set by the 2 stalwart speakers today. And we have got a series, another 2 days, 20th evening we have got 2-hour session, and 21st also we have got 2-hour sessions, where we are going to deal with data analytics, audit under CBS environment, audit of specialized branches, and also OTS and restructuring. So this is how this entire series have been planned. So I'm sure with the knowledge that they are going to disseminate today, we are going to do a great audit and see that effective audit. So the way in which Amarjit Chopra ji tells, I still remember, if you do a perfect audit and the effective audit is done, there cannot be a single branch where no MOC is there. That's what he indicates. You do a great audit. I'm not telling you to give MOC for the sake of it. Never do that one. But do it a perfect audit so that is the one which is going to speak for us in the various forums where we are going to take these numbers. With this, I welcome all of you And my special welcome to Amarjit Chopra ji. His presence itself is make a difference for all of us. Thank you so much, sir. Thanks a lot.
Now, I would like to request C. Mungesh P. Kindre, sir, Vice Chairman PDC, to please introduce both of our faculties to all the members.
Thank you. It's my great pleasure and honor to introduce both these eminent faculties for today's important webinar on bank audit. I'll be very brief because in the bank audit arena, both these speakers need introduction. And especially our past President Chopra sir, if I go on introducing him, I think 2 hours are insufficient for the purpose of this introduction. So first, Mr. Dhananjay Gokhale is a chartered accountant having vast experience, more than 20 years. And he is actually, one can say, specializing in a bank audit per se. And as I know Dhananjay, I'm not reading out this thing because he's a very close friend of mine. And as I know Dhananjay is having keen interest in bank audit. And rather than only doing audit, he's really a student of banking, and his suggestions are taken by many bankers and even banking associations also. He has been speaker with the WIRC as well as ICI in many programs. He has been co-opted member with AASB and also contributor to various publications of Professional Development Committee and AASB. What about, I should say about Chopra sir? I mean, there is, frankly speaking, introduction is just a formality because everyone knows about Chopra sir. But saying few lines about him inspires us, and that's why I don't want to lose this opportunity. Chopra sir, of course, we know that has been a president of the Institute of Chartered Accountants of India, and I can say he's one of those presidents who has been internationally known and internationally acclaimed and made Institute proud. Sir also has been on the various government committees. He has been earlier in the NACAS, is the chairman of NACAS, and now a part-time member of the NFRA also. Sir has been speaking on ethics and bank audits and various other subjects, audits, for a number of years. And his passion, I think, is really commendable and appreciable and, of course, salutable. Sir has been in all areas of the banking because he has been a director on the bank. He was a director of Bank of Baroda. He also has been an auditor of the bank, and he has been an author. He has been writer. He has been speaker on banking. So I think we could not have, better faculty than sir. So I welcome both the faculties for this session, and I think we'll start with the session. Sir, thank you very much, the Development Committee. And in fact, in this testing times, sir says that a lot of expectations are there from Professional Development Committee. So we will be expecting a lot of guidance from you, sir, in this regard, not only from the point of view of audit, but also from the point of view of improving the entire, the knowledge base and the expertise of the fraternity in banking and bank audit sector. So again, welcome you, sir. Thank you very much for accepting the invitation. Over to you.
Thank you, sir. And now I would request CA Dhananjay Gokhale, sir, to start with his first technical session.
Thank you, Chairman, Vice Chairman, PDC. And thank you, Amarjit ji, for being here.
So we are not able to hear you.
We are not able to hear.
So we are not able to hear you.
I am audible now?
Yes.
So thank you, Vice Chairman, PDC, and Amarjit ji.
Before Dhananjay you speak, I have just reached the institute, so I just switched off my listing. I'll be reaching there in some time.
Yeah. And thanks to PDC for giving me an opportunity to speak on IRAC norms, which is kind of becoming a favorite subject for me for last few years. Because of, I think I should thank to RBI for taking out multiple circulars related to IRAC and making these things complex day by day. And today what I will try to cover is I will try to put forth the slides about the bullet points about IRAC norms, and I will try to extend that to practical examples. More thrust which I want to give today is about the automation of IRAC norms, which has been expectation of RBI. And just to give a brief background about that expectation is RBI came out with September 20 circular, wherein they categorically ask the banks to ensure that the automation of IRAC should be there in the CBS. And it had certain ramifications on CBS logic. Also, the September 20 circular talks about when manual intervention is possible and what kind of documentation is required. Just to put it in a nutshell, wherever the bank is doing a manual intervention, it has to be having a maker-checker concept. It should not be decentralized. There should be sufficient audit trail maintained for next 3 years in encrypted mode. And most important thing is that wherever there is a manual intervention is there, that SOP has to be approved by the board. So it has to be a board approved policy. If board approved policy is not there, that itself is a deviation from September circular. Last important thing about September 20 circular is, which is more from central auditor's point of view, but branch auditors should be also aware about that it talks about the test area or the test environment which should be made available to the auditors to test the CBS system. So that's something is the expectation from the regulator. And so I will just share my screen and we'll start off with the presentation. Just give me a minute. So as far as the circular goes, there are two basic circulars which one needs to be aware about. One is a master circular which was issued in April 2022, which is a kind of compilation of earlier master circular of April 22, and there was a series of additional circulars. Then there was another circular in October 21, which was about, again, IRAC norms. Fortunately, in the current year, there is no new circular which has got issued after this April 22 circular, so that goes good. In addition to that, we need to refer to the master directions which are issued by RBI related to relief measures by the banks in areas which are affected by natural calamities. This is an extension which is given to the agriculture advances. So it's a relief measure for agriculture advances per se. So let's straight away come to the topic about what is the basic distinguishing factor between type of advances or type of assets, I should say. So first and foremost thing is that whenever we are using the term of NPA, NPA is the term which is related to assets and not only confined to only advances. So whenever we are talking about NPA, we need to also ensure that we are extending our logic to assets and not confining or limiting ourselves only to advances. Second important distinguishing factor between PA and NPA is that these are the accounts which are ceasing to generate income for the bank, or they might be carrying a risk which is higher than normal banking risk for that particular account. So now let's talk a little bit about what is meant by additional risk or higher risk than normal banking risk. See, as all the banks are into a lending business, there will be an inherent risk of realization which will be associated with any lending activity which the bank will carry out. So that's the inherent risk of losing or risk of non-realization. But if anything is there which is beyond normal banking risk, then the account might get marked as NPA, irrespective of whether the account is meeting 90 days delinquency norm or not. So let me just give a couple of examples of that. For example, if a bank has sanctioned a project loan, wherein there is a DCCO which is predefined, that is date of commencement of commercial operation. Now, what does this date mean? So suppose you have a project loan which is sanctioned, say, today in March 23, and it is given for a setting up of a factory unit. And it is expected that the factory will start off with the commercial production, maybe 2 years down the line. Say in March 2025, the production is supposed to start. So presuming that there is no extension sought by the borrower for DCCO extension, if the commercial production doesn't start off by that date, that is by March 25, then there is additional perceived risk related to this account. So even if the account is otherwise regular, even if the account doesn't have any overdue amount in that, still the account will be called as NPA account till the time the commercial production doesn't start off. So it's additional risk which is perceived. Let me give you two additional examples, similar to that. Let's presume that you are having the underlying security against which you have sanctioned advance. And as an internal process of bank, maybe after every 3 years, you are doing the revaluation of underlying security. Now, the new valuation which you obtained, it demonstrates that as compared to the earlier valuation, there is a deterioration in value which is beyond 50%. So in that case, the account will be straight away classified under doubtful asset category without waiting for any delinquency to happen. So the account otherwise might be a normal account, but still it will get classified as doubtful asset category. Let me give a third example. Let's presume that we are having a secured loan. And at any point of time, if you observe that the underlying security available for that account is less than 10% of ledger outstanding balance, then the account will be straight away taken to loss asset category because of non-availability of sufficient security. Again, here you don't have to wait for 90 days norms. So on one hand, we are having normal 90 days delinquencies which are there. On the other hand, we have instances wherein you don't have to wait for 90 days norms and you have to classify that account as NPA. Let me just add last example. There might be an account which might be showing signs of incipient weakness or inherent weakness in that particular account. So in that case, you don't have to satisfy the 90 days criteria. Only thing is that you need to have a circumstantial evidences to prove that there are inherent weaknesses which are lying in the account. We'll talk in detail about that whenever we are talking about that inherent weakness slide. But this is just an example which I thought that I will give you. Now let's turn to the examples or the normal examples which RBI has given as to when the account should be classified as NPA. Let's start with term loan. As far as term loans are concerned, account will be marked as NPA whenever interest, installment, EMI, principal, if it remains overdue for a period of more than 90 days, then the account will be marked as NPA. Now, a couple of practical points related to that. First and foremost point is to distinguish between criteria of this 90 days delinquency between term loan and CCOD. For all accounts other than CCOD, the criteria is that the delinquency should be more than 90 days. And for CCOD, it is only 90 days. So on 90th day, the account might get marked as NPA. As compared to that, for all other facilities, it is 91st day. Now, when we are talking about these loans, advances and delinquency norms, first let's talk about what is meant by overdue amount. If an amount which is due to the bank under any credit facility, if it is not paid on the due date which is fixed by that bank, then that amount will be called as overdue amount on the same date. So suppose say 10th is my EMI repayment due date. If I don't pay my EMI on 10th day, on 10th end of that itself, my first overdue day will start. So like that, I need to calculate more than 90 days criteria. Now, in normal circumstances, how this overdue amount can be arrived at? So we need to refer to the repayment calendar, which typically the bank will provide to the borrower. Repayment calendar is nothing but a replica of idealistic scenario wherein the borrower will keep on repaying the amount exactly on the due date of EMI. And in case of any deviation from that, naturally this ideal ledger balance will change. So at any given point of time, you can identify that what should have been the ideal drawing power or ideal outstanding balance in a particular account. So if you're testing a particular account on say 18th of March, end of the day, you need to compare your ledger balance, compare that with ideal DP, and if the difference is adverse, that portion will be called as overdue quantum or overdue amount, wherever the ledger balance is more than your ideal DP. Now, once you arrive at overdue amount, you need to calculate as to whether that amount consists of an amount which is overdue for more than 90 days. Now, typically, a general perception is that if the number of installments are more than 3, the account will get marked as NPA, a standard benchmark which we follow. But imagine a scenario wherein first of the month is the due date, and that block of 91 days consists of 2 months which are of 31 days. So let's take an example, say July, August, and September, wherein total days are 92. So in that case, even if the number of installments overdue are less than 3 but more than 2, so in that case also the account will turn into NPA. So you need to be very critical about application of this 91 days norms, and it has to be applied at every end of the day. It's not month end, weekend, or quarter end. Its concept is every end of the day. Now let me give you another example. Let's presume that there is an advance repayment which has occurred. So let's take a case. It's a housing loan, and let's presume that in the month of October, the borrower has prepaid 12 installments together. So suppose 10,000 is my EMI amount. As a borrower, I have paid 1.20 lakhs in that account in the month of October. So typically, depending upon again the bank's terms of sanction, there will be different behaviors which will be expected from CBS and by the bank. Let's talk about multiple options which the bankers are giving. There are a couple of banks which have terms of sanction that wherever you are paying a lump sum amount, it will be parked in a suspense as a liability, suspense amount received. And at every EMI due date, that amount will be apportioned. So the benefit of prepayment is not really passed on to the customer, but that again will be subjected to terms of sanction. There might be a second option wherein borrower is given an option that wherein a lump sum is paid that is considered as repayment towards the principal, and he is given an option either to reduce the tenure of loan or to reduce the EMI. There is a third option also which is prevalent in banking industry, wherein the amount is credited in that particular account, but subsequently you may not be really required to pay that amount. So we are talking about this third option. So this 1.20 lakhs has got credited in the month of October. And let's presume that subsequently he hasn't paid any installment. So 10th October was the due date. He has paid 1.20 lakhs on 10th of October itself. Subsequently, there is no repayment. So typically in the subsequent year, in the month of December or January, the account will turn into NPA because that's where that more than 90 days criteria will be fulfilled. because for first 12 months period, your ledger balance will be always less than your ideal DP. So the account will not have any overdue quantum. So if there is no overdue portion, the account will be always under performing asset category. Now, when you mark this account as NPA somewhere in the month of say December or January, immediately the next thing which you need to do is you have to reverse the income which is not realized in that account. Now, as far as this account is concerned, what it will look like is on 10th of December, 1.20 lakhs is received. Subsequently, at the end of every month end, there will be interest which gets debited in the account. So like that, there will be 15 or 16 interest debit entries which will be there. There will not be any subsequent credit against that. Now, the question is, when I'm marking this account as NPA, typically in the 16th month, what should be the quantum of reversal of income which I need to identify? Now, as the accounting concepts are, whenever a realization concept is applied, there are only two ways to say that a particular amount is realized. One way is that I need to receive an amount subsequent to that. Now, in the given instance, there is no subsequent credit is there. So first condition is not fulfilled. Second possibility is that I have already paid an advance amount to that particular customer in the sense bank with the intention that out of that portion, certain portion relates to my future interest. So when I'm paying in the month of October, if my intention is that out of that quantum, certain quantum is related to future interests which are getting debited to the account. And if the bank does accounting based on that, then only I can say that there is an interest realization which has happened. But what might happen in the banking system is, bank might have already adjusted that against the outstanding balance. So if you look at the March end balance sheet, that is after 6 months of passing after the October, the advances are already shown on a lower amount. So the amount of 1.20 lakhs is already adjusted. And subsequently, whenever the interest debits are there, naturally, if you are already adjusting the amount against the principal, you cannot say that the interest which is debited subsequent to that is realized out of that. So the entire portion of 15 or 16 months will be considered as unrealized portion, and that will get reversed. One more important thing is the NPA norms nowhere relate to realization of interest concept for classification of advance. The realization concept is once you mark that account as NPA, then the concept of realization is required to be applied, and wherever the application of realization doesn't work, you have to reverse that interest portion. So that's one about the term loan from a practical side. Now let's take a case wherein there is a moratorium period granted for interest. So maybe say first 6 months are granted as moratorium. So the interest which is debited in this 6 months period, that will become due only after the end of moratorium period. So you need to be very critical about whether the amount is due or not. And unless and until the amount is due, you cannot say that the amount is overdue. Let me give you the third example. There are certain housing loan schemes wherein a principal portion is given, and then for 1 year portion, bank says that the interest on this particular term loan will also get capitalized, and then the EMI portion will start. So suppose 100 rupees is my loan amount, 90 rupees are disbursed. For 1 year, 10 rupees is the interest which will get capitalized, and my EMI will be based on 100 rupees. So in such cases, the 10 rupees interest which is capitalized by way of sanctioned terms, that for that, the testing of realization of income should not be applied. It is already presumed to be realized because it is part and parcel of my sanction limit. So when you are again applying the concept of realization, look at the terms and conditions related to term loan. So that's about term loans. As far as bill discounting, bill purchase facilities are concerned, if they remain overdue for a period of more than 90 days, then that will get marked as NPA. But as far as agriculture advances are concerned, if there is a overdue amount for more than 2 crop seasons for short duration crop and 1 crop season for long duration crop, then the account will get marked as NPA. Now here, you need to identify that for an agricultural loan, what kind of crop season is adopted by that particular borrower, in the sense which type of crop the borrower is growing. And as far as crop season is concerned, every state has SLBC, which is a deciding factor to decide the crop season for each and every crop which is sown in that particular state. So long duration crops are those wherein the crop season is more than 12 months. Short duration are the crops wherein crop season is less than 12 months. So that's the definition. Now there are certain relief measures which RBI has given related to crop loans. Wherever there is a natural calamity which has occurred, RBI has granted a relief wherein banks have given a discretion to restructure the loan. They can reschedule the loan. And there are specific criteria are there. The criteria is that for short-term agriculture loan, if the crop loss is between 33 and 50%, then extension is provided to the extent of 2 years. And if the crop loss is 50% and more, the bank can give 5 years repayment period extension up to the extent of 5 years. both these 2 and 5 years will be including a moratorium period of at least 1 year. Now, friends, remember that the condition is minimum 1 year. It's not maximum. So that's what you need to refer to. One more very vital condition is that as far as short-term agriculture loans are concerned, the loans which are overdue at the time of occurrence of natural calamity are not provided this relief measure. So what might happen is a short-term agriculture loan might be having a overdue component. It may not be NPA, but might be having overdue of say 10 rupees. Then in such cases, if the reschedulement occurs, then the account will get downgraded. So these conditions are set to avail the benefit of retention of class. That is, standard asset will continue to a standard asset category. Same way for long-term agricultural loans, if only crop for that year is damaged, and if the productive asset is not damaged, then there is an extension of 1 year which is permitted. And wherever the productive assets is damaged, partially or totally, you can extend it for 5 years. So it's a relief measure which is given by RBI. And in this instant case, there might be multiple restructuring which are also possible during the life cycle of that particular crop loan. Then as far as derivative transactions are concerned, wherever the overdue receivable position is overdue for more than 90 days, then the account will get marked as NPA. Liquidity facility, same logic. Credit card dues, as far as credit card dues are concerned, you need to first assess that whether the bank is catering to the credit card customers or not. Because in most of the banks, they have formed separate subsidiaries wherein the credit card business is parked. But if you are doing an audit of a bank, which is also providing the credit card services on its own, then the norms are a little different. So if the minimum amount due, which is specified in the credit card, if it is not paid within 90 days from the next statement date, then that account will get marked as NPA. Then let's look at the conditions for CCOD accounts. As far as CCOD accounts are concerned, the account will get marked as NPA if the account is out of order. There are 3 conditions which are set out over there. So if either of the conditions are set or fulfilled, the account will get marked as NPA. So first let's look at the condition and then I will talk about the practical examples. As far as first condition is concerned, if an account is having, if the account is continuously overdrawn for a period of more than 90 days, then the account will get marked as NPA. Second condition is that if there are no credits in the account for a continuous period of 90 days, account will get marked as NPA. Third condition is that if the credits in the account are not sufficient to cover the interest debited during the same period, that is last 90 days, then the account will get marked as NPA. Now all these 90 days norms, the 98th day is today's day. Suppose I am testing this norm as on today. So today is 90th and I have to go backward. Now let's take examples one by one. Let's look at the first one and let me talk about the possible anomalies which can happen. When I'm talking about overdrawing concept, I need to compare my ledger balance with limit or DP, whichever is lower on that particular date. And if it is more than that, it is overdrawing. So if such overdrawing occurs for continuous block of 90 days, then the account will get marked as NPA. So far, so good. Now let's take ticklish examples. Let's presume that February stock statement is submitted on 10th of subsequent month, that is 10th March. February limit or DP was say 10 lakhs. And based on February stock statement, now the DP is only 8 lakh. So whether to consider the DP applicable from first or whether it is prospectively applied, that's the question which you need to resolve. According to me, whenever a stock statement gets submitted, irrespective of the date of submission, the subsequent month's first date will be the effective date from which the new DP should be calculated. So in the instant case, you are having a limit of say 10 lakhs in the month of February based on January stock statement. February, if it is getting reduced to 8 lakh, even if the stock statement is submitted on say 20th of March, still the effectiveness of the DP should be from 1st of March. So test the CBS system as to how the CBS system is behaving. Second example, no credits continuously from 90 days. Let's talk about ticklish cases. Let's presume that out of this last 90 days, 60 days, the account is having an adverse balance and the account is having a debit balance only for 30 days. As far as RBI's IRAC norms are concerned, there is no leverage which is given wherein it is stated that when we are talking about this 90 days, no credits in the account, it doesn't talk about adverse balances. This condition is essentially there only to tackle one possibility that there might be an instance wherein the borrower is not having a regular business activity. So there are no credits in the account. So it's a kind of a dormant kind of a borrower. So that's why the account will get marked as NPA. Third one, if the credits in the account in last 90 days are not covering the interest. So let's talk about a simple case. Suppose we are testing this condition on say 18th of March. So block of 90 days might be from say 19th of December till say 18th of March. Now in this block, let's presume that we are having 10,000 rupees interest, which is debited in the account in December, January and February end. So total interest is 30,000. As compared to that, suppose say on 26th of December, you have a credit of 35,000, which is more than 30,000. So naturally the account is PA because credits are sufficiently covering the interest. Now let's take an example that instead of 35,000, only 25,000 are credited on 26th of December. There are no subsequent credit. So naturally 30,000 and 25,000, if you compare, credits are running short to cover the interest debited. So the account will be NPA. No doubts about that. Now the second thing is that you need to calculate the quantum of unrealized interest. Now what is the quantum of unrealized interest over here is last 3 interests which are debited in the account, that is 10,000 each. There is no subsequent credit after that. So naturally 30,000 will be the quantum of unrealized interest which should be reversed and not net amount of 5,000 because 25,000 is credited on 26th of December, which is already adjusted against the principal. So that you cannot utilize for realization of subsequent interests which are getting debited in the account. So pay attention to the quantum of unrealized interest which is getting reversed in that account. Automation of NPAs, we already talked about that. Let me add one more point. As far as LC-BD exposure is concerned, if a LC of third-party bank is discounted by your bank, then in that case, the exposure is presumed to be on the other bank. But suppose you are discounting LCs which are issued by other branches or your bank of your bank, naturally the exposure is on the borrower. So wherever, suppose an account is marked as NPA and if the borrower is also having LC-BD facility, you need to see that out of that LC-BD, the quantum of LC which belongs to the other bank, that is the LCs, underlying LCs are related to other bank, that portion will remain PA. Rest portion needs to be marked as NPA. So what you need to see is whether the master data in CBS is capable to capture these instances. The reason being, if you are not able to capture that data, then automation of NPA will not work. So for LC-BD, master data should contain details as to whether the underlying LC belongs to the bank or other bank. Then there are certain clarifications which RBI has issued. Wherever you want to upgrade any account, in that case, at custody level, there should not be any amount which is overdue. So you need to check the custody level wherever the upgradation is possible. So now it's clear-cut guideline which is issued by RBI in the form of clarification, which was issued in last financial year, that partial recoveries subsequent to the date of balance sheet, all these are not required to be factored in. Just to take an extreme case, suppose you are having an account which might be having say, say 4 installments are overdue in term loan. It is marked as NPA on 31st March. And on say 4th of April, the account is closed. So in that case also the account remains into NPA category because subsequent recoveries means that on 4th of April, if the account is closed, NPA recovery will happen. But on 31st March, the account was NPA. RBI is having a concept that at every end of the day, the account will get tested as to whether it is standard account, within standard, whether it is SMA 0, SMA 1, SMA 2, or whether it is an NPA account. So it's the end of the day activity. So no question of factoring in subsequent recoveries related to that, unless there are some reconciliation entries which are pending because of some wrong entries which might have got passed. But otherwise, there is no scope for this. Then as far as temporary deficiencies are concerned, there are 2 types of temporary deficiencies which RBI has defined. One is non-submission of stock statement and another one is non-renewal. So let me talk about the practical examples of that. What RBI has stated is, in case if the stock statement for a particular month is available with the bank, drawing power out of that stock statement can be used as a drawing for subsequent 90 days period. So if you are having a September stock statement, DP based on that can be used for October, November and December, even if the stock statement is not submitted by the borrower. Later on, it cannot be extended. So ideally, such account will turn into NPA on 31st March, typically after a period of 6 months. But this leverage is given only for large borrower accounts. So RBI is stating that for large borrower accounts, you can use it for next 3 months, that is next 90 days. But it is not for, it's not a generic relaxation which is given. So first question which you need to ask the bank is, according to bank, what is the definition of large borrower and other borrowers? That is the first and foremost thing which you need to ask, because then only you can apply this yardstick. Second is that whether your CBS system is equipped to capture large borrower and other than large borrower, because then only automation can work. So just check up this condition and then conclude whether automation is really happening in that bank or not. Then let's talk about non-renewal cases. If an account is not regularly renewed for a period of 180 days, the account will get marked as NPA. Now, practically what might happen is the account might have been short reviewed. So in such cases, short review period should not be counted. In the sense, suppose account has been due for renewal on say September 8. Bank has carried out a short review for 90 days. So the counting of 180 days will be from 1st October itself and not from 1st of January. Because short review cannot replace regular renewal. In fact, if you read the appraisal note of any bank for short review, usually they mention that renewal was not possible because of non-submission of maybe certain information and document. So short review is done. So it's more of operational purpose exercise. It doesn't relate to non-renewal exercise. So 180 days counting should be from that date. Then few exceptions which RBI has provided, like advances which are given against underlying security of term deposits, NAC, IVP, KVP, life insurance policy, those will be never be treated as NPAs till the time security cover is more than outstanding balance. So that's the only point which you need to see. But if suppose ledger balance and security value are almost at par, then subsequently interest will be debited in the account only if margin in that ledger balance and security value is available. Otherwise, it will be on realization basis. Same way for central government guaranteed advances, even if they are fulfilling 90 days criteria, accounts will not be marked as NPA. But income recognition will be always on cash basis in such instances. Now let me just give you a practical example. There are various central government backed schemes are there. Then in central government per se doesn't provide any guarantee. But there is a separate entity which is formed, which is providing guarantee to the banks as far as certain loans are concerned, like say CGC cover is there. CGTMSC cover is there. Now the moot question is, can you call this as a central government guaranteed account? My personal view is that unless and until there is a direct guarantee provided by sovereign, that is central government, you cannot say that they are exempted from NPA category. In such insurance kind of scheme, the only leverage which RBI has given is at a time of calculation of provision, even if the account is marked as NPA, you are not required to provide on that portion of coverage by that insurance portion. So ECGC, CGTMSC, suppose 100 rupees is my outstanding balance. CGTMSC coverage is 80 rupees. I have to make provision only on balance 20 rupees. So 80 rupees provision is not required, but classification norms are uniformly applicable in such cases. Same is the case with advance against gold or advance against any other government security. Now for gold loans, let me just give you some couple of practical examples. What might go wrong? First thing is that as far as gold loans are concerned, bank has to always maintain a LTV ratio, that is loan to value ratio of 75%. So if it is breached, the account will be instantly marked as NPA. Second peculiar condition which exists in many areas or in many banks is many times gold loans, they have been given a bullet payment. So at the time of expiry of the loan, there is a new loan which is sanctioned against the same security. The proceeds of new loan are credited to the earlier loan, and the loan simply continues. It's a classic case of evergreening of advance. So be vigilant about that. There might be certain instances wherein earlier loan is paid in cash and new loan is again disbursed in cash. Now, how to check the reality? Let me just suggest a couple of points related to that. First thing is that you need to verify the underlying documents like pay-in slip and other factors. Second is that verify the gold packets which are sealed. Typically, there will be a date of sealing of gold packet which will be written over there. Verify that. If you find out that the packets are still sealed, and the date of sealing was say maybe 5 years back, it's a classic case wherein the gold packet is never opened. And typically, whenever a loan is closed, naturally any borrower will like to open the packet and see that whether the gold ornaments are there or not in safe custody, and maybe again take a loan. So you need to be vigilant about the underlying evidences which are available before you. So gold, a loan is just one example out of that. Then classification has to be always for borrower. So it will be at custody level. So if one facility is marked as NPA, all other facilities will get marked as NPA, barring LCBDs, wherein the underlying LC has been issued by third-party bank. So if the LC is issued by same bank, even that will get marked as NPA. For consortium advances, you have to go by member bank's record of recovery. So you might have a case that there are 4 consortium members, 2 have marked that as NPA, 2 might marked as PA. But wherever consortium members, few have marked that as NPA, go little deeper into the reason for marking those accounts as NPA by the member banks. Suppose there is an underlying fraud which has occurred, or there is something which is under forensic investigation. Be little vigilant about that, because in times to come, anyway the account will show the sign of incipient weakness or inherent weakness, and the account will turn into NPA. So you need to be little diligent about such instances. Straightaway classification norms, we already talked about that. So I will just skip that particular slide, because we already talked about erosion beyond 50%, having underlying value less than 10% for secured loan, wherein it will be straightaway going to doubtful asset category and loss asset category. As far as fraud cases are concerned, if the fraud is reported, bank can stagger the 100% provision into next 4 quarters. First quarter will be the quarter when fraud is detected. If it is not reported, you have to make 100% provision instantly. Now, as far as fraud cases are concerned, irrespective of the underlying security, you have to make 100% provision. So security can be NAC, IVP, KVP, FD, gold, whatever it is. Once it is declared as fraud, you have to make 100% provision. There is no exception which is provided for that. As far as inherent weakness is concerned, as we discussed earlier, there might be instances wherein there are some solitary credit entries are there just before balance sheet date and the account is regularized. Now let me give you a couple of examples wherein you cannot say that the regulation of the account was out of genuine credit entries. Let me give you a couple of examples of that. Let's presume that there is a corporate loan and the director has introduced his own funds as a capital contribution, and using that the account is regularized. Or maybe take an example wherein fixed asset of that company is sold and the account is regularized. Now these are the instances wherein amounts credited are not really generated out of business of that particular borrower. So be little vigilant about that as to how that account regulation has occurred. And if you foresee or if you see that the entries are not related to business realization, then you can verify, adding certain additional circumstantial evidence about like conduct of account, then quality of underlying security, quality of stock statement which is submitted, and then take a decision as to, according to you, whether the inherent weakness exists or not. And friends, remember one thing: bank is required to demonstrate before you as to how the account is regularized. So it's the other way around. Bank has to prove before you that whether the inherent weakness exists or doesn't exist. So if they represent before you by ample or sufficient evidences, it's your call to decide whether the inherent weakness exists or it doesn't exist. Then as far as mandatory valuation of security norms are concerned, these are applicable only in cases wherein the account is having or the borrower is having exposure above 5 crores and the account is NPA. For all other instances, it is not mandatory in nature. Now, 2 things which are mandatory for such instances. One is that annual stock audit is required by external agency wherever stock and book debts is the underlying security. Second is for immovable properties, the valuation is required to be carried out once in 3 years by an approved valuer. Now let's take a scenario wherein these conditions are not met. So in that case, bank has to demonstrate before you as to how the security value is arrived at. And as an auditor, you have discretion to decide about the adequate valuation, in the sense whatever is fair according to you. So let's take a case that immovable property was there as underlying security, exposure is 10 crore, property value is at 20 crores, which was valued 4 years back. Now here you need to apply your professional skepticism. You should not simply say that 20 crores was there, so it may not get deteriorated and all that thing. That is outside our purview, because we are not expert in doing valuation of immovable property. So in that case, factor in the possibility that there might be an encroachment, there might be a property which might get into a depleted condition, or maybe now the property is not having proper access, so because of it, which valuation might get hampered. So apply your professional skepticism rather than just going by a plain vanilla logic that property valuations typically will remain constant. That is not the case everywhere. So apply this yardstick diligently. But now let's talk about the cases wherein account is NPA but with exposure below 5 crores, or accounts with movable properties wherein mandatory valuation norms are not there. So be critical when you are verifying the NPA statements which are prepared by the bank. Let me give you a simple example. Suppose you are verifying NPA account which is a vehicle loan. Vehicle is purchased say 4 years back and now the account is turning into NPA. 4 years back the value, that is the cost of vehicle, was 10 lakh. So today that value cannot be 10 lakh. So verify that what is the bank's practice, what are the internal guidelines to reduce the value of that security. If there is no guideline, that's a perfect case which you need to report and give it as a kind of a suggestion that bank should have a uniform policy for that. If the bank says that on case-to-case basis they reduce that value, verify that what is the internal control mechanism to verify that at every year end whether it is reduced or not. And again, the real question, whether automation of NPA can really work. if the CPS is not equipped to factor in such depreciation requirements. Then as far as projects under implementation is concerned, I will just quickly cover this topic. We already talked about DCCO and other things. So I will talk about certain leverages which RBI has given to extend the DCCO. Now, friends, remember one thing, that project loan is essentially a term loan which is given. The moment you give CCOA, typically it is expected that the commercial production is already started up. So RBI has given 3-4 criteria of leverage for this. One is that wherever there is a additional project outlay beyond 25% of the original outlay, then in that case, you can fund additionally for that additional project outlay, and the entire repayment schedule can be restructured, but still account can be under standard asset category only. Only condition is that the account should have been under standard asset category and it shouldn't have started off commercial production. So in that case, entire structure of that account can be changed. Next one is this chart wherein DCCO extension is permitted. So based on this condition, if the DCCO is extended, you can extend the repayment period to that extent. So suppose, taking the first condition, that is DCCO for infrastructure is extended by 2 years. So if a bank extends the repayment schedule by 3 years, then in that case, even though the credit call belongs to the bank, still the account will turn into NPA because it is restructured. So all these conditions are basically to ensure that class of asset is retained and there is no deterioration of the class. Third one is that one can go for change of ownership. So if the ownership of the entity has changed and the changing of hand is to the entity which is outside the group entities, then in that case, additional 2 years DCCO extension is permitted. Then there is another leverage which is given to finance the cost overruns. So what RBI is saying is, in case of infra and non-infra, you can extend a standby credit facility to the extent of 2 and 1 year to take care of cost overruns. So it is only specifically meant for cost overrun and not for anything else. So firstly, there has to be cost overrun. Otherwise, this additional financing is not possible. Otherwise, it will amount to an ever-winning exercise. If a bank covers cost overrun beyond 10% also, it will amount to resettlement or restructuring and the account will get immediately downgraded. So we already talked about various NPA norms. So we'll come to the income recognition part. So income related to NPA account will be always on the realization basis. For PA, it will be always on accrual basis. Just one point which I wanted to address over here. See, again and again, we are talking about realization concept. So accounting wise, realization can be in cash or it can be in kind. So in one case, RBI has provided leverage that it can be considered as received in kind. So if the interest due, which is converted into say a FITL, or instead of FITL, it gets converted into say listed equities or listed shares or bonds or debentures, any security for that bank. So on the date when this listed security is acquired by the bank, on that date, whatever is the market value is there for that security, that will be presumed to be realized by the bank. So here there is no cash realization, but the realization has occurred in the form of in kind, in the form of listed security. So this is only one area wherein realization in kind is permitted. Let's look at another option or another possibility. Bank might convert a loan or bank might realize a loan or recover a loan by way of acquisition of non-banking asset. Now in that case, there is no specific guideline of RBI to consider that as realized. So what is supposed to be done is, in case of non-banking asset acquired, it might be acquired at a fair value or maybe auction value, but the accounting will not factor in that option value or acquisition cost. It will be always continued at net book value of the advances. And as and when the NPA will get sold, that will be the point when it will be considered as realized. So keep this thing in mind that the RBI circular is providing realization in kind only in case of acquisition of listed securities and not otherwise. Then as far as order of recovery is concerned, the discretion is left to the bank to decide that in which order it will get recovered. Provisioning norms have remained same. So I will just go through those slides because the percentage hasn't really changed. Just 2-3 points which I would like to cover before I conclude my session, and we can have a short question answer session also for 5 minutes. As far as advances guaranteed by CGT MSE, CRG, FTLHI, and ECGC, then the provision will be made only to the extent of balance of excess amount over the amount which is guaranteed by these corporations. Take out finance, the conditions which are set out in February 29, 2000 circular have remained same. No change in that. Post-shipment suppliers credit also no change because Exim Bank provides a guarantee cum refinance scheme wherein the guarantee will get settled in 30 days. So practically such loans don't face a NPA criteria. Export project finance, again same concept, that if the exporter in India has exported goods to some other country and if there is an embargo in that other country which is imposed for outward remittances, then 1 year extension is possible provided that the borrower in India, that is the exporter in India, has opened an account in that country and the amount is received to the credit of his account. So in next 1 year, he can bring back that amount and for 1 year that account will remain into PA category. So lastly, I will just touch upon restructuring of advances. As far as restructuring of advances is concerned, any advance can be restructured except cases wherein fraud has been detected. Another condition is that it will be always initiated by the customer as a request to restructure the account. It cannot be suo motu from the banker side. Third thing is that it will be always prospective and it can never be a retrospective effect. The moment account is restructured, standard asset will get downgraded to substandard asset. But as far as NPA's restructuring is concerned, NPA will remain into the same category. So suppose substandard account is restructured, it remains into substandard asset category. It doesn't get downgraded. And then accordingly, the applicable provisions will apply. Now, earlier you will remember that there was a sacrifice calculation which was expected. So that has been done away with. Now, there is a criteria to upgrade such accounts. So whenever such restructured accounts are upgraded, they need to fulfill the satisfactory performance criteria. So for MSME with exposure below 25 crores, if no payment is overdrawn or overdue for a period of more than 90 days, during 1 year from the commencement of first payment which is made under the restructuring formula, then in that case, the account can be upgraded. In all other cases, there is a condition that it will be at least 1 year or to the extent of 10% of repayment of total amount. So in that case, there should not be any default. So the categories are stringent. And for exposures above 100 crores, additional criteria is there that it should be rated at least at investable grade, that is BBB-. Provisioning rules, we already talked about that. As far as SME is concerned, SME 0 is the category under term loan, wherein overdue quantum is for 1 to 30 days. SMA 1 will be 31 to 60, SMA 2 61 to 90. But for CCOD accounts, the criteria are only SMA 1 and 2. SMA 0 criteria is not there. And the criteria is only about overdrawing. That is the only first condition of out of order status will be applicable. Same 31 to 60 and 61 to 90 days criteria. As far as CRILC reporting is concerned, CRILC reporting will be based on monthly basis, that is the main reporting, and there will be a weekly reporting with respect to the defaulters which are having exposures above 5 crores. So this reporting will happen only for 5 crores and above accounts and not related to any lower level accounts. Prudential framework for resolution plan for stressed assets. It is applicable only in cases wherein the exposure is more than 1,500 crores, and below that the application is not yet announced by Reserve Bank of India. So that won't be really applicable. So I won't touch upon that. These are just few points which I've just jotted down. But before I end the session, just a couple of points which I wanted to talk about. First one is that whenever you are, concluding any MOC related to NPA, always pay attention to multiple factors. One is date of NPA. Second is security value. Third one is correct classification of advance account. And in case of existent NPA account also, test those accounts as to whether the date is correctly captured, whether the security is correctly captured or not, because based on that only the provisioning will be made. As far as gold loans are concerned, we already talked about that at length. Last thing is that be a little vigilant about possibilities of evergreening of account, and also verify that whether the automation of NPA, which is or automation of IRAC norms per se, that includes three factors. One is classification of advance, one is income, second is income recognition, and third one is provisioning. So if either of the condition is required to have a manual intervention, be vocal about that, and also check up whether the bank is permitted to do that manual intervention based on board approved policy or not. So even if you are doing a branch audit, if you come across a scenario wherein manual intervention is done, be vocal to say that in your LFAR and main audit report, or communicate that to the central auditor, your observations wherein automation is not working. And last but not the least, if the automation doesn't work in sync with September 2020 circular, it will amount to a regulatory violation. So be little vigilant about that. And thanks to PDC once again to allow me to express my views and patiently hearing me. Thank you very much. So if any questions are there, maybe we can take questions for 4 to 5 minutes, and then I'm sure that all of you are eager to hear Amarjit after that. Thank you very much.
Definitely. So we've shared some questions with you. Either we can take those questions.
Yeah.
Right. So, okay. So one of the question was, generally in the sanction letter is silent on treatment of advances EMI. What will be assumed in this case?
What will be the?
What will be assumed in this case?
What will, no, I didn't get the query actually. Can you just repeat?
Sure, sir. It is generally the sanction letter is silent on the treatment of advances. What will be assumed in the case of NPAs?
Yeah, I got it. Yes. See, wherever any advance amount is received, one is the sanction terms, second one is loan agreement which has to be verified. Third is the credit policy of the bank and the product brochure which the bank has given. And if none of these things are there, then it will be always presumed that it is credited to the account. Now, the next thing which we need to see is whether the bank is passing corresponding accounting entries for that or not. I have never seen any CBS which passes an accounting entry for future interest which is going to get debited in the account. So if there is no accounting which is backing this concept that future interest is already received to me, then it's already adjusted against the principal. So that's the presumption which one has to make. If the credit policy, sanction letter, product brochure, everything is silent on that.
Okay. In LFAR, how to deal with the TDS requirements?
Actually, LFAR doesn't have that TDS related part per se. And see, there is one, you can say, clause is anyway there in LFAR that if any other matter which one wants to bring to the attention of management or central auditor, one can add over there. But TDS typically will come in tax audit report. In LFAR, if there is a systemic failure on TDS, like suppose the TDS is not working at all, one can always include an LFAR in that clause.
Right. The last question for the session would be, in CC accounts, the stock statements are not submitted for 3 months continuously, then the account becomes NPA. Is there any change?
Actually, non-submission for 3 months will not turn that account into NPA. Just to give an example, like say September stock statement is submitted. So for October, the DP is used. And presuming that it is not a large borrower account, so November, December, January, at January end, the account will turn into NPA after completing that 90 days long because it is continuously overdrawn. And for large borrower, one can make use of the DP for next 3 months. So September stock statement will be used for October, November, and December, and by March end, the account will turn into NPA. But just to reiterate, that large borrower is not defined by RBI. So bank should have that policy, internal policy to bifurcate between that.
Right, sir. Thank you so much, sir. Now we'll take all the questions in the open house. I hope you're there with us in the open house as well.
Yeah.
And thank you so much, sir. It was indeed an informative session, and I'm sure the members could gain a lot of this session, sir.
Yeah. Thank you very much.
Thank you so much.
My pleasure.
Sure. Now I would request CA Prasanna Kumar D, Chairman, Professional Development Committee, to please welcome CA Amarjit Chopra, sir, past President of ICAI.
I think I have already been welcomed.
So
yes, we could request Chopra sir.
If Prasanna is there, it's fine. But otherwise,
so you are once again welcome.
We have already welcomed both of us at the beginning of this session.
Yes,
you
sir.
can also,
Yes.
So why to trouble him again?
Okay.
So Dhananjay, it has been a let me put it this way. Firstly, thanks to the PD committee, Prasanna and Mangesh Kenraji and Seema.
Thank you.
I think one of the most performing assets of the institute, if you really ask me. I've been holding it out for, I think, any number of years. I've seen her working for that matter. And of course, the other member from the PD committee, she's there. I may not have got her name, but I think she has been comparing it very well.
Yes.
And of course, to the participants, Dhananjay, let me thank you for an excellent presentation. It has been a wonderful, I think, exhibition of what the bank branch audit is all about. Very frankly, after your deliberations, hardly anything is left for me. Very frankly, if you ask me. I will like to start with the question that was asked to you last with regard to the TDS question and its relevance. I have always said one thing, that one has to be extremely careful about what one is writing in the long form audit report and what one is writing in the main report, because it can have implications in some other reports for that matter. You see, number of our branch auditors may feel shy of the MOCs for various reasons. I don't want to get into that. But when it comes to comments like this, that tax is not being deducted at source from the interest, from the fixed deposits or somewhere else, they continue to write it. That has been my experience, both as a director as well as an auditor. Now, if you have written it in long form audit report somewhere, or even if you have disclosed it by way of a disclosure in the main audit report, and you are the tax auditor also, it has a serious implication for the tax audit for that matter. And not only that, to my mind, it has another implication even from the main auditor's report point of view. And that I will like definitely you to comment upon, Dhananjay. If I am wrong, please bear me out. If I write somewhere that tax at source has not been deducted from the interest, now that would automatically mean that my expense cannot be allowed. Okay, in respect of that interest. Now, if I'm not quantifying that, then it is a sort of a disclaimer. But I write in the main report one more thing also, which is very critical, that tax provision is being calculated at the head office. I always write that. Provision for bonus, provision for tax, etc. All these things, or gratuity, etc. are being made at the head office. That has been my standard line, basically, because that's the format which has been given to me, even by the banks. Now, if I am writing that the tax provision is being made at the head office, so I have to guide the CSA. And I have to guide the CSA that tax at source has not been deducted from the interest on the fixed deposits, and it may have a bearing upon the tax provision. So to that extent, it might require a qualification also, very frankly, if I'm serious about it. If I'm not serious about it, then I don't think I have to say anything about it. Merely writing it in the long form audit report, even in the other matters, any other matter which you would like to bring to the knowledge of the bank, may not suffice, very frankly. Because if something can affect my provision at the head office level, suppose out of the 1,000 branches, 200 branches are following the same kind of a practice. These 200 branches, if are following the same kind of practice, can have a bearing upon the total tax provision of the bank. So why the auditor should feel shy of mentioning it in his main report itself? That is what I would like to say. And I would like to have your comment upon that. Because I have been saying it very frankly in all my deliberations earlier years, that somewhere or the other auditor needs to be careful about these kind of comments. If he has commented there, then he needs to bring those kind of comments in the main audit report also, for that matter. So this is something that I feel is imperative and is essential, which the auditor should follow under those circumstances. I thought I will pick up from this particular question and then proceed. Okay. I think whosoever raised this issue must have got the answer. Of course, what Dhananjay had said was also absolutely correct, that there is a particular column in the long form audit report, any other matter that you will wish to bring to the knowledge of the management of the bank. And you can do that. But when you do that, also have a very clear-cut set of mind, clear concept that whether it affects my main report or not, and whether it affects my tax audit report or not, somewhere or the other. I think that's very essential. Okay. So we can proceed with the, I think the effective planning. I don't know what the effective planning means, very frankly. The only thing that one can talk of is planning in any walk of life is important. And I don't think that CA student needs to be told about the planning part. Because even when I am a student, I have to plan for my examination along with my training. Throughout the day, I am with the, for the purpose of the training with my, you can say principal, I'm traveling here and there. I can quote my example. I was doing my MCOM and CA simultaneously, basically MCOM from Delhi University in the evening and CA during the daytime. Used to go to Sonipat for audit of the Atlas Cycle Industries. Had to plan for it at what particular point of time one has to leave the home so that one can catch the train. At what particular point of time one has to leave the client's office from Sonipat and reach Delhi University to again attend the classes in the evening, for that matter. And then, as the luck would have it, I was lucky. I would put it this way, that our firm used to have 2 holidays. Saturday was off for the students, articles. And so one would plan the life in a manner that on Saturday one would like to read for the MCOM, and on Sunday one will like to read for the Chartered Accountancy course. So I think planning is a very essential part of your life, whether you are a student or you are in service or you are otherwise, even if you are in job as a working partner, basically, you have to plan your time between your office and your family also, basically. When you contest elections, you have to plan your time between your electioneering activities and your family also. So I think all those things, planning, if you don't plan, you plan to fail. I think this is a very common proverb that if you don't plan, you plan to fail. I think this is, so bank audit or bank branch audit is not an exception to this. And it is more important because what Prasannaji said was in the beginning, that most of the banks will not give you time. Given the desire of the bank, basically, bank will like you to audit it before even the balance sheet is closed, very frankly, and ask you to issue the report thereon. But it is for us. The bank will tell you, you have to finish off the audit in 2 days, 3 days, 7 days, 10 days, 15 days, whatever time the bank would give you. But my one request to each one is, never think that whatever time has been given by the bank, that is sacrosanct. You just try to follow it. That's a different matter. But I think for proper effective audit, because effective planning is one part, but to me more important is the effective audit is another part. Most of the chartered accountants, when we talk of, they say, sir, if I don't complete it within the given time, then I will lose the assignment. You cannot lose the assignment. There's no way that you are going to lose the assignment. Let's be very clear about it. If the bank says 10 days and you feel that it is going to take 12 days or 15 days, take your 12 days or 15 days, but you should be effective in your audit. Because once you get a branch audit in a particular bank, I think more difficult part is how to get into that bank to get a branch audit. Because once you get in there, for 4 years, your job is granted. You don't have to worry about anything else. Because for 4 years, they cannot just say that you will not be appointed auditor in the second year or in the third year or in the fourth year, unless there are certain other practices which may not be desirable on our part. So don't worry about 2 or 3 days or 4 days extra to be taken. So whenever you plan, you first try to plan from the viewpoint of how many days have been given to you by the bank. But more importantly, you plan from the viewpoint of effective planning should result into an effective audit. Effective planning without an effective audit has no meaning, basically. That you have planned very well on the paper, but you are unable to execute it. Unless you are able to execute your plan, this planning will have no meaning whatsoever. Let's be very clear about it. The moment you get an appointment letter, I think the first part is that you have to write to the what you call the previous auditor that you are that we have been appointed the auditor in this particular branch. Please, and you are only writing to him that you have to communicate that you have been appointed and whether he has got any professional objection or not. It is nothing like no objection. No previous auditor has to issue you no objection. Let's be very clear about it. I think this is a wrong concept in the mind of the previous auditor that I have to issue a no objection. No objection is not there. It is only to communicate to him that whether you have any professional objection to my acceptance of the audit. What can be the professional exception? Professional objection? Professional objection can be whether your appointment has been made in a valid manner, whether he was removed in a illegal manner. Now, in the case of bank, that will not be applicable. Let's be very clear about it. The only thing that he can say is that probably his earlier fee is pending in respect of that particular branch, and that also only audit fee, nothing else. If that audit 99.9% not, I personally feel 100% cases, no audit fee will be pending in respect of any branch auditor. So even that professional objection cannot be there. So why to be worried about it? Just write a letter. You must make sure that the letter goes to his professional address. Both, whether you're writing it in a physical mode or you are writing it through the mail, basically electronic mode. It should be communicated to him. That is one thing that you have to be very clear. And after that, you write to the branch. You communicate with the branch. You communicate with the person concerned that you want to know, number one, what is the size of the branch? I'm not asking the dimension of the branch. Let's be very clear. I'm asking the nature of the business of the branch. How much, what is the total quantum of the advances? What is the total quantum of the deposits? What is the bifurcation between the non-fund-based advances and fund-based advances, basically, for that matter? And if you can find out from them, what is the nature of the advances? Whether there are more of cash credits, there are more of term loans, there are more of agricultural loans, more of industrial loans. What kind of loans have been given by them? There could be more of housing loans for that matter. There could be more of, you can say, the demand loans, which is against the Kisan Vikas Patra, or these are against the Indra Vikas Patra, or these are against the fixed deposits, or these are against the LIC policies. Because each aspect of this is going to affect your planning, basically. Because if these are cash credits, I think your entire planning changes. If this is term loan, your planning is different. And if these are housing loans, I think your planning is altogether different, because generally the housing loans are safe. Because nobody wants that his house should be sold out tomorrow, because a house is the main collateral security. But what you are supposed to see in that, basically, that is what you have to communicate to your staff member, that there should be an agreement between the bank, between the builder and the borrower concerned. Basically, there should be a tripartite agreement if it's a new house which is being bought, for that matter. And if it is a loan against the Kisan Vikas Patra, or against the LIC policies, or against the fixed deposits, then it is altogether different. Because what you are supposed to see is whether the proper lien, the manner in which the lien had to be marked in respect of those securities. Because these kind of loans cannot be treated as non-performing loans till the time the margin can be met. If it's only when it exceeds your total amount of the security, then only it can be treated as a non-performing account. Otherwise, no way that this particular account can be treated as a non-performing account. So your responsibility to tell the staff that such loans, the demand loans, may not be classified as non-performing loans, and there is no question of reversal of interest in this. Because if you have given a loan against a fixed deposits, the fixed deposit interest would always be there. So you need not reverse. You cannot expect that he will keep on paying you the interest. So please be very clear. What is the nature of the loans which have been given? If it is an agricultural advance, I think Dhananjay talked of crop loans, different kind of crop loans, long-term crop loan and the short-term crop loan, for that matter. And there it is you can say the judgment of the SLBC, which is the state level bankers committee, which comes into the play. What is a short-term loan, a short-term crop, or what is a long-term crop? You don't have to exercise your discretion. What is a short-term crop or what is a long-term crop? Look at the SLBC. What does the SLBC say, for that matter? So when you are planning, your planning should be very clear. And if it's a deposit-oriented branch, then the entire thing undergoes a change. In that case, what is more important from your angle is that there should not be money laundering. Because if it's a deposit-oriented branch, what kind of KYC has been done by you? I think that has to be most important part of your KYC, most important part of your planning. What kind of know your customer activity has been undertaken by the branch? Whether that is proper or not, because today PMLA is very strong, prevention of money laundering. Some of the banks have been asking their concurrent auditors to certify that there is no money laundering which has taken place. So when you are looking at this nature of the branch, whether it's a deposit-oriented branch, whether it's an advance-oriented branch, if it's an advance-oriented branch, in that case, the branch can be in a loss. If the total amount of the advances which are NPA is much higher, and if a branch is a deposit-oriented branch, it cannot be in a loss. Now you will ask me the question, how it will not be in a loss? Because if it is a deposit-oriented branch, the head office will transfer you by way of a transfer entry interest. No account can become NPA. So no loss is to be booked in that particular case. So no deposit-oriented branch, to my mind, will become NPA, will be in losses. But an advance-oriented branch can be in losses, for that matter. In advance-oriented branch, your emphasis will be on many things. Your emphasis when you are planning, you will be asking your people to focus on credit appraisal. You will be asking your people to focus on the sanction. You will ask your people to for the disbursal, whether any disbursal has taken place without the terms and conditions being complied with. Then you will ask your people to look at the monitoring part of the various advances, basically. And of course, then the security value and the valuation thereof, which Dhananjay referred to you, and the compliance with the IRAC norms. Now, I think the entire planning undergoes a change the moment you come to know about the nature of the branch itself. If it is fund-based, it is different. Because then the emphasis will be on what? The emphasis will be on the interest income. The emphasis will be on to find out whether IRAC norms with regard to these, you can say receipt of the interest or receipt of the principal have been complied with or not. Or you talked of, Dhananjay talked of the stock statements being received in time, or the renewal having taken place in time, for that matter. But if it is the other way around, suppose your branch is more non-fund oriented. It is advance oriented, but the advances are more non-fund based. You have given more guarantees. You have issued more LCs, basically. Because all those LCs and guarantees are in the nature of the contingent liabilities for the banks till the time these get fructified. Because if you have issued a guarantee cannot become fund-based till the time the guarantee is invoked by the person in whose favor the guarantee has been issued. And once it becomes fund-based, then all the IRAC norms will be applicable. Let's be clear on that. But if there is an LC, suppose, now you have issued an LC, it's an import LC or it's a domestic LC for that matter, whatever kind of LC you have issued. Now, if LC has been issued, the import has taken place against that particular LC, and that will also depend upon whether it is a site LC or it is a usance LC for that matter. Now, if it is a site LC, the implications are different, because in that case, the borrower has to get the goods, imported goods, paid the moment the goods reach India. And the banker will not be required to satisfy that particular point, unless the borrower actually, the person concerned for whom the LC has been issued, he refuses to pay. But in the case of usance LC, suppose you have given a period of 90 days or 180 days, your liability to pay would arise after the goods have been taken away by the borrower, after 90 days from there, or after 180 days from there. So I think the entire checking undergoes a change. Why I'm trying to say all this to you is, My purpose of saying is that when you select the team and when you educate the team, because for the purpose of advances, you cannot give an article who has just joined in the responsibility. You have to have a team. When you plan for the entire audit, you have to have a team, and then you have to entrust the responsibility that who will be checking it, who will be supervising the quality of the audit. I think that's very important. Now, there could be cases where there have been cases where we have entrusted the ledger scrutiny to an article. Now, if you have done that, you are planning to fail. But if you have given the ledger scrutiny to a chartered accountant, to a partner, or to a paid chartered accountant, or to a person who is well experienced, it is a different matter altogether. So to my mind, whenever we talk of effective planning, we also want to talk of effective manning for the purposes of an audit. That's very, very important under all those circumstances. And why I talked of this nature of the branch, etc., etc., I talked of SA 315. When I talk of planning, I refer to SA 300. And when I refer to know your client, what are the risks involved? After all the risks have to be assessed in respect of a particular client. And how will you assess those risks? By knowing the client. What kind of a business you are going to audit? Now, if you know what is the kind of business you are going to audit, you are able to assess your risks, and then you are able to man those risks basically properly. And I think that for that, SA 315 is there under those circumstances. So please be very clear. It is not that one is simply saying that have a planning. Planning is because there is an auditing standard on planning, SA 300. And when I say try to assess the character, nature of the business of the branch, it is because of SA 315 for that matter. It is not without that I'm saying it. And then I say, whatever you audit, you have to document it. Today, if you look at the long form audit report of the last 2 years is absolutely different from what the long form audit report used to be. Today in the long form audit report, you are supposed to say, particularly in respect of the advances, as to what are the large advances. You have to give the names of those advances. You have to give the account number of those advances. And what you have checked in those advances. Earlier, this was never done. Today, in the long form audit report, you are supposed to give. So what you will do? You will document it. If you don't document it, how you will do it? After all, there is a standard on that, on documentation. There is a standard on audit evidence, 500. What kind of audit evidence you are supposed to gather? And that's a part of the planning. You will tell your people that if at all you say, because you will say that read all the circulars, read all the previous reports of the long form audit report. This is going to be all a part of your planning. You will write in your planning that the moment you go to the branch, collect the previous reports. Which reports? The revenue report, the inspection report, the accountant auditor report, RBI inspection report, if at all there is anyone. Now, if you collect those reports, you are supposed to read those reports. The reports are not only to be collected. Let's be very clear about it. Most of us forget that reports, if I am collecting, I am supposed to read it. Because the moment I read those reports, it gives me the kind of risk which is involved in this particular branch. Because if a particular report tells me that a fraud was committed in this particular branch in a particular manner, so you have to be careful about that particular part. So your planning cannot be fixed. You have to tell your staff that your planning is flexible. You read a particular report, you extend your scope in the planning. You include that particular part in your planning, that this also I'm going to do. I have been very much against a fixed audit program, because fixed audit program is a tick approach. I have done this. No, I think my audit program has to be flexible. When I tell this particular person that you do this, and when I tell him that you please read the report of the RBI, if RBI says that your deposits have been showing certain trends which are not healthy, if your RBI inspection report says, or last long form audit report says that you have been window dressing your deposits at the end of the period, will you not change your planning? You will change your planning for the purpose of the audit. I will give you one simple example. If my long form audit report, I'm going through a long form audit report of the previous year, and that long form audit report says that in the last year, what the branch manager had done, debited the cash credit account of the parties and created fixed deposits out of it. Suppose the party had a limit of 5 crores. The party had a DP of 5 crores. No, simply because the party has got a DP of 5 crore, it does not mean, and the party had already availed, say, cash credit limit of 4.5 crore, it doesn't mean that I can debit his account by 50 lakhs and create a fixed deposit of 50 lakhs. Because cash credit account is not meant to create a fixed deposit. Cash credit account is meant to meet the requirements of the working capital, for that matter. So what one is trying to say is, when you read certain reports, when you plan, your plan has to be flexible. And this has to be conveyed to your team that the plan is flexible. And one more thing, and I think personally, I will like to say one thing here. To me, the easiest audit of all the audits is the bank branch audit, if you ask me. Provided I know what the banking is. But the unfortunate part is, I send my team without telling them what is the difference between the equitable mortgage and any other mortgage. I don't even tell them what is the difference between the cash credit hypothecation and cash credit pledge. No, that will not work. I don't tell them what is the distinction between the equitable mortgage and the English mortgage. What is the difference between the fixed charge and the floating charge? I have to educate them. I have to educate my team, basically. So when I plan, I have to plan for educating my team also. And that is why I say that I have to select a team which knows what the banking is. I normally give an example which I heard from Mr. Tandon, who used to be an expert in the banking. Mr. Who happened to be the, you can say, the chairman of PNB. Who I don't think any other chartered accountant has held those kind of positions which Mr. Tandon actually beholded. He used to say that a lady went to a bank, no disrespect to any of the ladies here, let me be very clear. He said a lady went to the bank with a cross check and gave it to the cashier and said, I want the payment. And the cashier said, Madam, payment cannot be made across the counter. The lady didn't know what is the meaning of this. She said, I don't mind coming behind the counter. Now, the point that I am trying to raise is, if I don't know what is the real meaning of the banking, I will not be able to plan it. Believe me, in every bank today, every bank, the kind of systems that they have, no other organization has. Every branch sends returns virtually on every aspect. And this is what I'm going to talk about, the effective audit and effective planning. Just for another 5-7 minutes. Every branch sends certain returns, is required to send certain returns to its immediate controlling office, which can be zonal office, which can be regional office, and zonal office and regional office will in turn will consolidate the various returns received from the various branches and in turn send it to the head office. And can you think of what all these returns cover? These returns cover the returns on frauds, the returns on NPS, the returns on irregular advances, the return on loss of any security. It covers return on any LC which is devolved. It covers return on any guarantee which has been invoked. It covers return on any loss of any demand draft, pay order, token. You see, whenever we go, we get sometimes we get a token from the cash counter. Even if that token is lost, that return has to go. If some currency shortage has occurred, that return has to go from the branch. No, my very simple way of planning an audit is, I go to the branch, I ask them, please give me the returns which you have submitted to the controlling office, particularly in respect of the irregular advances and frauds. Frauds, particularly for the purpose of finding out what is the kind of modus operandi which was followed in any kind of frauds in this particular branch. And then plan to mitigate that risk in my audit. And so far as the irregular advances are concerned, if an advance was not irregular as on 31st December, I will ask them to give me a return which you have sent for the 31st December or for the month of December, for that matter. Let me put it that way, for irregular advances. If an advance was not irregular as on 31st of December, then 90 days period would never be completed now for the account to become NPA. An account can become NPA only if it is an overdue for a period of 90 days. Today, every branch is supposed to download a day-end report, which has to, and on a daily basis, let's be very clear about it. And I think this has to be a part of my planning. Whether day-end reports are being generated or not. If day-end reports are not being generated in respect of irregular advances or any all other aspects which the RBI requires them to do, then I think the branch needs to be classified somewhere else. But if they have been downloading these irregular advances, and as on 31st of December, this account was not irregular, then this account cannot become NPA because 90 days period would not be over. No way the 90 days period would be over. So what I am supposed to look at? My planning will indicate that out of the advances which were irregular on 31st of December, please see which accounts became regular after 31st of December. Other accounts would have automatically become NPA. Suppose there were 10 accounts which are irregular on 31st of December. 6 accounts have already been classified as NPA by the bank. In those accounts, my planning will indicate that I have only to find out what is the reversal of interest and what is the quantum of security for the purpose of provision. That's all. But so far as those 4 accounts are concerned, which have been regularized post 31st of December, I have to find out how those accounts have been regularized. And particularly if these accounts have been regularized near the 31st of March. If these accounts have been regularized near 31st March, it means the branch is trying to hide the level of NPS. So what I am supposed to look at? I will definitely take out the vouchers the day on which the account has been regularized. If the amount has come, say I am auditing Punjab National Bank and the amount has come from Bank of Baroda, I am not Sherlock Holmes that I will wear a hat and put on goggles and then go to someone else and try to find out how this has happened. No way. That's not my job. I will say fine. But if this amount has been transferred from my branch only, from one of the cash credit accounts or from some other cash credit account, then I have to be careful. Suppose my term loan was irregular and this amount has been transferred from my cash credit account. I can definitely do it. I can do it, provided my cash credit account does not become irregular by debiting this particular amount. Suppose I had an irregularity of 10 lakh rupees in my term loan account. I had a cash credit account of 1 crore rupees, out of which I had availed 85 lakh rupees. I can definitely debit 10 lakh rupees, provided I've got the necessary drawing power in that particular account. If I do not have the necessary drawing power in that particular account, I cannot do it. Or if already I have availed, say, 1 crore rupees or 95 lakh rupees, and I debit 10 lakh rupees and say that this 5 lakh irregularity in the cash credit account is hardly of 5 days or 10 days. No, I cannot do it. Because I cannot recover, PNB cannot recover the amount out of by creating an irregularity in PNB itself. No way it can be done. So what is important while planning is how the irregular advances as on 31st December have been regularized, particularly near the date of the balance sheet. And I can tell you, if you start doing it, you will come to an effective audit because 2 or 3 MOCs would be generated only out of it. You may come to know of it, what has happened. And one of the very important aspects of planning is, when you plan, also tell the staff very clearly that distinguish between the loan sanctioned during this year and the loan sanctioned during the earlier years. Whatever loans have been sanctioned during the year, I have a greater responsibility, both with regard to the credit appraisal, both with regard to the credit disbursal, both with regard to the sanction and the compliance thereof, and also the monitoring of the account. And if an account was sanctioned in the earlier years, fine. I cannot go back to every sanction now. There's no way. But whatever has been sanctioned during my audit period, there I have a greater responsibility. And I think the planning must bring it out very, very clearly. And the planning must bring out one thing, that in all large cash credit advances, particularly, you should not only be looking at the operation of the account. Operation of the account can be fantastic. Absolutely fantastic. Debit, credit, debit, credit, debit, credit. No way. No, nothing. It seems that this is the best possible account. Ask your staff to read the files. Planning would include reading the file in case of the cash credit accounts. That's very, very important. When I say you read the files would indicate themselves that the branch manager is sending him certain letters, drawing his attention to some of the adverse features. He might have written certain letters to the client. And I can tell you, we have been auditing and we have been able to locate much of the adverse features through the files only. Please read the file. Please study the stock statement. If the stock statement only says opening stock this much, closing stock this much, or it only says closing stock this much, value this much, it is no stock statement at all. The stock statement has to say what was the opening stock, what was the further purchases or the production, what was the sale, and how much is the closing stock and what is the value now. You have to tell your staff to test check. I will not say you cannot do 100% check it, but in the case of the large advances, you will have to do it in the case of the cash credit accounts. Tell them to study that in the last stock statement which was submitted in the earlier year, how does it compare with his last audited balance sheet? Something which is submitted, say in 22, say in March 22, he submitted a stock statement. How does it compare with his balance sheet for 31st March 22? If the variation is 5-7%, ignore it. But if the variation is 30%, 25%, 40%, and what is going to happen is, why I'm telling you out of this experience, that every time you will find that the stocks which are there in the audited balance sheet are lower, the debtors are lower, and creditors are always higher in the audited balance sheet compared to what were submitted earlier. And if it is that, try to find out whether the DP really was available in the last balance sheet even. If there was no trying power available according to the last audited balance sheet, make that account NPA not from today. Make that account NPA from that particular day. But don't go by just one balance sheet. Go to earlier year also. Go to the 21 also. If 21 also reflects the same position, then don't leave it. Then the account is definitely NPA. But you will have to tell it by way of planning to your staff members. It will be one of the points that you have to incorporate in your planning. I can go on, very frankly, and there will be, in every branch, there will be government guaranteed accounts, central government guaranteed accounts, there could be state government guaranteed accounts, there could be other kind of loans which have been given. I don't want to get into too much of the details thereof, but what I'm trying to say is, if you know what the banking is, if you study the returns, if you study the exception reports which have been generated at the branch level, I can tell you that you will do a much, much better job than what you would be doing otherwise. And in the planning, you will say that you will look at the other assets also of the bank. And very frankly, if you take long form audit report as the basis of your planning, there's nothing else required. Just make long form audit report as the basis of your planning. If you can tick those also, the boxes that you have checked it, I think that's the end of the matter. And in the planning, you will have to tell your staff that it is not only the main report or the long form audit report. There is another report which is called Ghosh-Jalani Committee report. None of us actually checks it when I say this. And Ghosh-Jalani Committee report is a report which says that no fraud can occur in this particular branch, because it's a report with regard to the control systems in the branch. And one of the questions is whether there is a rotation of the duties or not. And that branch where that Nirav Modi fraud happened was always under the audit. And somebody must have written that yes, the rotation of the duties has been there, but that man was sitting on the seat for almost any number of years, and that is why the fraud occurred. In my planning, the reports that I am supposed to give, that has to be the basis for my planning. My just hunch cannot be the process for my planning. After all, these are the reports which have to be generated, which have to be the basis for the planning. If in long form audit report, he asked me the questions about cash, he asked me the questions about the bank reconciliation, he asked me in the bank reconciliation, he asked me the questions whether there are any outstanding entries in the bank reconciliation system or unresponded cash transactions. No, I should say in the planning that I must look at the bank reconciliation and look at the unresponded cash transactions, because unresponded cash transactions are nothing but a fraud. So what one is trying to tell you is that somewhere or the other, it is not planning that you can sit at home and plan for something. You have to know what you are supposed to deliver. What is your deliverable? whatever is your deliverable will be the basis for your planning. अगर आपको यही नहीं पता कि मैंने डिलीवर क्या करना तो आप प्लान क्या करोगे? सिंपल सी बात है. If you don't know what exam you are going to pass, which subject you are going to study, it's as simple as that. You are studying chartered accountancy and you are preparing for IAS. ये तो नहीं हो सकता ना. This is not possible. If you are preparing for CA exam, then you have to prepare for CA exam and you have to study the subjects which are relevant for the CA exam. So if you are going to deliver certain reports for the bank branch audit, those reports are relevant for you. And please read those reports, what are deliverables in that report, and based upon those reports, based upon those deliverables, please plan it. And allocate your duties, allocate your team based upon those deliverables. Because if the deliverables are complex, in that case, automatically, what you are going to do, you will put a senior person. If your deliverable is simple, if you are only supposed to see whether cash balance has exceeded the limit, I think even an article will be able to do that, if you are able to tell him. But then overall, who will be able to supervise it? Again, he has to be one of the partners or one of the paid chartered accountants. It cannot be the other way around. So my humble submission to everyone is, you see, we are losing out on branch audit for the want of quality. Let's be very clear. We may or may not agree. One of the reasons is the computerization of the IT system, the CBS system. Dhananjay ji was referring to the IT systems coming in the branches and the automation of identification of NPS. I may beg to differ with him to a little extent. And this is what I've been arguing with the Reserve Bank of India. I think Seema would remember 12 years back when RBI wanted to raise the limit of the bank branch audit to a different level, 50 crore at that time. One could argue it out with them. That you say that the NPAs are being identified by the system. Where are they? If that is the so, why the revenue recovery should happen? Why agricultural advances should not be classified as NPAs when the recoveries have not been there for 3 years or 4 years? In public sector banks, this is one request that I can make to PDC through this forum. In the case of public sector banks, the records are not digitized. Stock statements are not digitized, unlike what has happened in the private sector. Private sector may say that we are not supposed to get the branch audit done. May say so. Because my records are digitized, even stock statements are digitized, and someone sitting in the head office can audit that. But in the case of the public sector banks, the stock statements, the debtor statement, creditor statements, everything is there at the branch level only. And if at all some account has to be classified as NPA based upon those stock statements, looking at the veracity thereof, it has to be done at the branch level. It cannot be done at the central office level. So till the time such records are digitized, I don't think that there is a justification for doing away with the branch audit. So my humble request to each one of us is, let's plan it better, let's execute it better, and let's do this job for the sake of the profession better. I'm passionate for this profession because I have nothing else to fall back upon, very frankly. People may have some other sources of income. One does have those sources of income, and one is really concerned why we should lose out these opportunities. We should not lose out these opportunities. And I can guarantee one thing, that whatever anybody may say, all records are not digitized and all NPAs cannot be identified at the branch level automatically. There's no way that it is happening. And the kind of restructuring which happens, the kind of overdrawing which happens, I don't have to comment upon that. So thanks a lot, Seema, and thanks a lot, Prasanna ji, Dhananjaya, and the other people here for providing the opportunity, Mangesh ji. Whatever I had in my mind, I have been able to say. But if there are any questions, one will definitely like to take those questions and answer those out. In between, I used one Hindi line. I know my South Indian people may not like it, basically, but I think at times when you want to express something better, you come to the mother tongue. Of course, father doesn't have a tongue because he doesn't get the opportunity to speak. In any case, people say, why people say that it's always a mother tongue? Because mother keeps all the talking, does all the talking, and father doesn't get the opportunity to speak. And that is why we say this is mother tongue. Yeah.
Thank you so much, sir. Like, sir, after listening to you, I felt so much clear. I want to do the bank audit. I feel that much. And you explained with slow clarity that effective planning. And on behalf of the PDC, I would like to urge all the members that we'll be uploading this also on the PD portal. Before you commence the audit, one day before also, please listen again to this, because every word that sir has spoken is of utmost importance. And with great clarity, sir, you have explained this. Thank you so much, sir. And sir, also on the chat, many members have thanked you and personally thanked you that you spared your time. And some members have also said 20 years before also they heard you, and still it is so good, and they have really appreciated, sir, your suggestions. So on behalf of the Professional Development Committee, sir, I'd like to thank you.
I can,
so there are two or three questions.
only say one thing, Seema, that
Yes, sir.
This profession has given me everything.
Right, sir.
And I'm willing to give back to this profession everything that's possible. Nobody would have known Amarjit but for this profession. So God bless them all.
Yes, sir.
And God bless us all. Let me put it that way.
Right, sir.
And let's together we grow. Let's do something which is qualitative, and in which we can take pride as an institute, in which we can take pride as a profession.
Definitely, sir. That is most important.
Whenever I talk of my days in the institute as a president, I never forget to mention your name. Why? There should be some reasons. There are, I will not like to name right now some of the other names, very frankly, but there have been such performing assets in this institute. I use this word as performing assets because, but for them, we would have been poorer as an institute. And if this profession goes on, if this institute keeps working still, this is based upon people like you and so many others in the institute for that matter. So I say, God bless you all.
Thank you so much, sir. Thank you. Sir, one or two questions, if possible, can we take? Although we have 160 questions. Yeah. Sir, one of the members is saying that if concurrent auditor has reported a cash short of very minimum amount on one particular day, then whether that needs to be clubbed in the statutory auditor report if the concurrent auditor
that can be taken as one of the risk factors,
and
you evaluate that risk and try to mitigate it. You go and verify the cash. Maybe not on one day. You may undertake the cash verification on 2 days or 3 days during your your working days, basically, when you are there for the audit purposes. And then you can say that I have personally verified the cash. And in any case, cash verification has to be done. And very frankly, Seema, it seems so good to verify the cash because a chartered accountant has never seen that kind of a cash. When you enter a cash box, basically, of a bank, and you have money all around, basically 2,000 notes, 500 notes, it seems so well. I think one feels rich in oneself. So it also mitigates your risk to a very large extent. I think one thing is very important. The denomination that you are checking, that should be mentioned. And even if the numbers of those currency notes from 1 to this, if you can mention, I think that would be better. But at least the denomination you should mention, that what was the denomination and what was the cash available with regard to that denomination. And say that during your checking, no discrepancy came. So even if the competent auditor has mentioned that cash was short, you have taken it as a part of your planning and you have still executed that very well.
Thank you, sir.
Next question.
Then there's another question. Sir, if which is devolved or in cash by beneficiary, then what will be the fund-based, whether it will be a fund-based advance or something else?
Which one?
No, if BG, bank guarantee.
The moment an LC devolves, it becomes fund-based.
Okay, sir.
Till the time it remains an LC, it is non-fund based, but the moment the LC devolves, it becomes fund based because the bank has paid out the money and that day they will debit it to the borrower's account.
Okay, right, sir. Then, sir, they are saying in case of dormant accounts and system is not recording minimum balance charges in regular cases. So what we can do in LFAR? Like in case of dormant accounts and system.
Bring it out in the long form audit report. You see, if the bank's policy, if the bank's policy is to charge and no waiver is to be granted, write it, it's a short recovery and then put it in the MOC. But if the bank has got a policy of waiving and that waiver has already taken place by sanctioned by the competent authority, then you do not even mention it in the long form audit report.
Right, sir. Right. That's one or two more. If account is NPA during the year, but the end of the year it is not an NPA, they are saying. Whether we should consider it as an NPA or we should not consider it as NPA.
You see, once the irregularity has been totally clear, totally, I'm saying, if the irregularity was for a crore and the crore irregularity has been totally cleared, not you cannot say that for 90 days the irregularity was 90 lakhs and now he has paid 30 lakhs, so the irregularity is only for 60 days. No. Once the irregularity has been totally cleared, and after that, if it is not an NPA, it is not an NPA.
Right, sir. Then, sir, members are they want to hear about you about this SPP bank which happened. Any guidance from your side what we should take care here? So,
SVC, about SVC, I have already posted on my LinkedIn.
Okay,
I have two worries there, very frankly.
Okay,
you see, SVC has happened because of the asset liability mismatch, totally.
Okay, sir.
They borrowed short. They had borrowed very short, but they invested in 10-year government bonds or 7-year or 5-year government bonds. Now, the person who is supposed to come, who has deposited the amount with you, can come any day and can ask you. Now, once the people knew it that you have invested in the long term and you don't have the money now to repay, there was a run on your deposits, basically. My only implication for the auditor was, without naming the auditor now, that 11 days before, he has signed a balance sheet before the collapse. No, there is a standard on SS 570 on the going concern. He was supposed to look at if the ALM had become so bad, asset liability mismatch had become so bad that the bank would not have been able to repay it. He was supposed to comment upon the going concern and qualify the report. Why he didn't do that? That's my concern. Nothing else. And I think I don't have to say anything beyond this, basically. And that is where the quality suffers and the auditing profession is seen in a poor light.
Right, sir. Then, sir, although you explained, your whole session was there, but 2 or 3 members, again, they have a worry that the balancing of quality vis-a-vis the short time to finish. Because
I think again, this is a misnomer. I have said everywhere.
You've said everywhere.
If the bank says 10 days, you take 12 days, 15 days, nobody can remove you. Let's be very clear about it. But it cannot happen that you say that you want to do the branch audit also, but you have a staff of only 1% or 2%. You will not be able to complete it within 20 days also, 15 days also. That's not possible. If I want a branch audit to be done, I should have the requisite staff strength also. After all, they are also time bound. They are supposed to, all the banks are listed today. They are supposed to meet the deadline of the SEBIs. So let's be very clear about it. And they also have the pressures. We should also be prepared to spare our time and the time of our staff to make sure that we also do not default on the timing part. I have been a branch auditor. Today also I'm a branch auditor, and I will continue to be a branch auditor even during the current year, for that matter. For the last 5 years, I've been a branch auditor. And before that also, I think out of my total 46 years or 47 years of practice, I've been a branch auditor for almost 27, 28 years or maybe more, maybe 30 years particularly. No, I have not been pressurized. Everybody would try to pressurize you, but it is up to you to take that pressure. You must learn to take that pressure. You have to keep on issuing something that this is what you want from them. And if they don't reply to that, issue a qualification, the matter ends. If they don't provide you the information in a given time frame, give a disclaimer. Who stops you to do that? After all, there is a standard on auditing, SA 700, 705, 706. There are 3 standards on reporting. I'm not getting into the CAM part basically. Now, those 3 standards you follow and issue your report, the matter ends. Nobody should be able to blame you that the audit has been, their consolidation has been delayed for you. If he does not provide you the information, you issue your report, give a disclaimer, give an adverse opinion, give a qualified report, whatever you want to do. Don't let the ball sit in your court. Throw it into the other person's court. I think that's very important.
Right, sir. Right. So just one last question, then we'll end. So how many times short review of accounts can be done at branch level?
No. I think Dhananjay answered it very well.
Yes, sir.
Short review means what? Short review doesn't mean anything. Short review has been done only because of the fact that the party was refusing to do something. That does not regularize your renewal. Once you have done it, now one of the banks in the North India had been doing it for 5 years together. Now the RBI has taken them to task, if you ask me. I don't have to say anything beyond that.
So just one more, in case of locker rent receipt beyond 90 days, whether provisioning is required for that, sir?
Yeah, locker rent is a revenue. Locker rent is a revenue. It's not an advance. Let's be very clear. And locker rent by most of the banks is on a cash basis. It's most of the banks buy on a cash basis. Now, I personally wonder sometimes why locker rent should be treated as a significant accounting policy, because locker rent does not constitute 0.01% of the total income of the bank. After all, we in accounting standards, we talk only of the significant accounting policies. Can it be a significant account policy when it does not amount to even 0.1% of your total income or 0.01% of your total income? So why should we be too much bothered about the locker rent? But in any case, I think a very good number of lockers, they have got fixed deposits with them. Part of the locker rent is always recovered by them by way of that interest on the fixed deposits. That is always accounted for. A part may not be, but you rather we will say that why to recognize a revenue which is uncertain of recovery. Okay. Thank you.
Thank you so much, sir. And sir, on behalf of the Professional Development Committee, I would like to express my thanks to you and also to Dhananjay, sir. So this will be one of our memorable webinars. There are more than 7,500 persons who have been doing all together, and in YouTube there are furthermore who are seeing this. And So thank you so much. And on
you.
behalf of the Professional Development Committee, I would also like to thank our Chairman, Prasanna Kumar sir, and Vice Chairman, Mangesh Kinere sir. So Prasanna sir is here. I'll just...
Yeah. So thanks a lot, sir. So after I took over as the Chairman of the Professional Development Committee, the first program we're having here is a resounding success for us. Particularly the one which was begun with Amarjit Chopra ji is definitely special to all of us. Not only for me, even the co-speaker Dhananjay Gokhale also feel the same thing. So I thank all the more than 7,000 participants who are made a beginning today. So I thank all of you. The same encouragement we need for our future endeavors, future programs also. So thanks a lot, Dhananjay Gokhale ji. Thanks a lot, sir. Namaskar, sir.
Thank you, sir. Thank you very much.
I also request all the participants to be with us in the webinar that is to be held on 20th March and 21st March. And we have already circulated you the brochure and the topics that we have. Thank you, everyone. Thank you, ma'am. Thank you, everybody, to be with us today.